Hi all, welcome to Investing for Profits. My name's Nate and today we're talking about two key metrics that are used a lot for value and fundamental investors, and they are earnings per share and book value per share. We're going to be breaking it down so it's really simple. So if you're just starting out, this is going to be a great episode for you. So stick around and let's get into it. So the last couple of episodes have been around what a share is, what a share price is, etc. And all these things that are relatively easy to understand. You don't need to go away and do anything. You absorb the information. There's a learning curve to that. But they're things that will excite most people that are trying to get into the share market and start their investing journey. Where it can become really daunting is once you need to start getting involved in what some of the numbers are and going away, building out a strategy and trying to find the information. What we're going to be talking about today, earnings per share and book value per share, is where some of the anxiety and self-doubt can start. And that's because we're looking for information now in amongst a whole heap of other information. When we're talking about going and finding a share price for Google, it's relatively easy to do. When we're going to find information about how Google's performing underneath that share price, we need to start digging around. It would be like going into a supermarket or into a grocery store, knowing that you need to go and find an apple, but have no idea where the apples are, no idea where fruit and veg are. Or even worse, if everything was just mixed in together and you had to find them. That'd be really challenging. If, however, you know that the apples are going to be located with the fruit and vegetables, and that the apples are likely going to be located with the fruit, and that they're all going to be bundled in together, you're probably going to be able to find that a lot more efficiently than if you go into a store that you have no idea how it's laid out or where those apples are going to be. So what I am going to teach you today is how to find the information, where it's located, how you can sift through MSN Money or Yahoo Finance or any platform you're using to find this information quickly. And secondly, if you're picking up an annual report that's 150 pages long and you're after 2 or 3 key numbers, where do you find that? I'm going to show you, so stick around to find out. We're going to be covering off 3 key items for both earnings per share and book value per share. Number 1, what is earnings per share and book value per share? Number 2, where do you find both of these bits of information? And number 3, how do you calculate both of these items if you need to calculate them? Once we get to the end of that, we'll be rounding that out with how you can use each of these and what do they actually mean. So let's start with earnings per share, also known as EPS. So what is earnings or EPS? EPS is a company's net profit divided by the outstanding shares of its common stock. It really serves to be an indicator of the company's profitability at a share level. So how many dollars of earnings per share is the company making? There is also an adjusted EPS, which will allow for extraordinary items and dilution of shares. In most cases, the higher the EPS, the more profitable a company is seen to be. It doesn't mean that it's a good investment, but it does mean that it's more profitable. So how do you calculate earnings per share or EPS? The calculation for EPS is net income minus dividends divided by the weighted common shares or outstanding common shares. There are 2 critical statements that you need to take from the annual report or a quarterly report if you want to calculate EPS. They are the income statement and the balance sheet. Both we're going to go into later episodes in more detail, but for the purpose of today, I'll show you how to pick out the information really simply. So within the income statement, we're going to be looking for net income and dividends. Within the balance sheet, we're going to be looking for the number of common shares outstanding. So how can earnings per share or EPS be manipulated by a company? We know the inputs that go into it being net profit, dividends, and the number of shares outstanding. So having the ability to impact any one of those 3 figures will have an impact on the end EPS. So from a net profit point of view, if we go out and drive higher revenues and we can maintain our cost base, that will increase our net profit and by default increase our EPS. If we go out and we have a clear focus for the next 12 months to drive our cost base down, revenue remains the same, but our costs decline, the gap in the middle, the net profit will increase. Whether that's sustainable or not, conversation for a different day. For the outstanding shares, if the company believes the value of those shares or the market price is below what is a fair value, they may go and do a share buyback scheme. By doing so, they reduce the number of shares in the open market and increase the earnings per share. Looking at this one metric, earnings per share EPS, isn't enough for us to be able to make a decision on whether we're going to go and buy this company or whether this company is good value to buy. What is important with EPS is to notice what's happening over a period of time, and also to understand that earnings per share or EPS feeds into a lot of other key metrics that we'll be talking about later that will help in deciding, is this a good company to get involved with? Is this one that we think there's great value? Likewise, it also allows us the opportunity to compare multiple companies and also to compare across multiple industries. So what is book value, or also known as BVPS? So book value per share, or BVPS, is a company's equity available to common shareholders divided by the number of outstanding shares. Book value per share really represents the company's equity position on a per share basis. So the calculation for book value is total assets minus liabilities divided by the total number of outstanding shares. Another way of looking at it is book value is the net asset value at a per share level, net assets being total assets minus liabilities. If you're wanting to understand more about what a share is, have a look at this link above, and I'll leave it in the description below on a previous video that we've made on what is a share. An undervalued share will be seen as one that has a book value per share that is remaining static at any point in time, or increasing, decreasing at any point in time, but for the purpose of this remaining static whilst the share price is falling, meaning that as a result, or as a ratio between the book value and the share price, the book value is increasing against the share price value. Likewise, when a share price is seen to be overvalued, that book value per share remains the same, but the share price increases and moves away from that book value per share. Book value per share is a key metric that is used by majority, if not all, fundamental and value investors. It won't be used in isolation to understand what a share price should be worth, but it will certainly be used to feed in at some point through the analysis period on whether this is a company that should be being purchased. At its core, book value per share is there to represent a liquidation sale on that company today. If that company went into liquidation today, everything was sold down, all tangible assets are sold down, we receive the funds for those, all liabilities, debts are paid off, what is left over at the end, divided by all of the shares in the market, each shareholder gets their slice of the pie of the funds that are left. It is important to know though, that the prices and the value that is listed against those assets as compared to what we would get through a liquidation sale may be different, but it's there really to make sure that we understand what the equity or what the value of that company is if it was all sold down today. So let's go and have a look at a simple example of how we could use a calculation like book value per share in our investing strategy. So let's consider we've got company ABC, which has a book value per share of $4, and we have company XYZ that has a book value of $18. The share price for both of these companies is currently trading at $15. Given we're talking about equity being net assets, when we look at company ABC with $4 worth of equity trading at $15 as compared to company XYZ, which is trading at $15 with $18 equity, which one do you think would be a better purchase looking purely at book value per share? Company XYZ would be a better purchase on the basis that it's trading at $15, but its net equity position, so if it was liquidated today, we would expect that $18 would be returned to us when we can buy the shares at $15. This is a great example of why company XYZ, when looking at book value per share only, would be considered to be undervalued. So book value per share, how can that be influenced by a company? They could go out and take the earnings and buy assets that are going to increase the equity value of an organisation. They could also take the earnings and go and pay down any debts, pay down the liabilities that they've got, increasing the equity within the organisation. They could look at shares outstanding, and similar to the EPS example, they could issue a share buyback scheme. By doing this, they will be reducing the number of shares in the open market and increasing the book value per share. So where can we find information about earnings per share and book value per share? Well, there's lots of different platforms, websites that can be used. Today we're going to look at two platforms. We're going to look at Yahoo Finance, which we'll cover off first, and also MSN Money, just so you can get a feel of where you find information and the types of different ways in which that information might be presented. So let's start out with Yahoo Finance, and we will have a look for Alphabet or for Google. So we type in Google and you'll see it come up here. Then we move into all the information that's going to be provided by Yahoo Finance on Alphabet or Google. So we can see the share price here right in front of us, and there's a whole heap of other information, charts and tabs. Again, there's a lot here, but it's about being able to cut through all the information and find specifically what it is that we're after. What we can see here in Yahoo Finance for Google on the front page is EPS, TTM. So TTM is the trailing 12 months, so the last 12 months. So we can see EPS is 103.81. And that's all the information that we'll be taking from this page. We've then got at the top here statistics. So if we click on that, so now that we're in the statistics tab, there is a lot of information here. Again, we just need to know specifically the information that we're after and where to find it. So what we're looking for is within this page, the income statement, which we can see here, and also the balance sheet, which we can see below. And the metrics that fall within the income statement and the balance sheet are reported here. So if we scroll through, we're looking for earnings per share within the income statement. And we can see here diluted EPS, TTM, 103.81. So that's where we can pull the EPS from. When we go down to the balance sheet, we're looking for book value per share. And we can see here, book value per share. MRQ is most recent quarter. So we will always look at the most recent quarter because the book value per share or equity per share, we want to know what the equity is right now, most recent report, not what happened a year ago or in the last annual statement. So that's why we always reference the most recent quarter. And we can see here 367.95. Now, if we scroll back up, we can get to a tab called Financials. This is going to give us information at an actual income statement and balance sheet level. Now within Financials, we can see income statement, we can see balance sheet, and we can see cash flow. We've also got over on the right hand side, annual and quarterly. So annual will give us the last annual report and quarterly will give us the most recent quarterly update. Depending on what you're looking for, you can toggle between the two. If you're pulling an annual report from a company's website or you've had one sent out to you and you're trying to compare information, you'll need to use annual. If you're looking for the most recent information available, quarterly is probably what you're after. So if we have a quick look at annual, we can see here we've got the last 3 years of information. Now if we scroll down, we're looking for net income, which we can see here. So for EPS, we need net income. So we've got net income. We also need the basic average shares or the outstanding common shares. And we can see here, basic average shares and diluted average shares. So if we take our net income and we divide that by our basic average shares, we will get our basic EPS. If we take our net income, we divide that by our diluted average shares, we will get our diluted EPS. Now, if we roll over to the balance sheet and have a look at book value per share, you'll see the same sort of setup. You've got annual and you've got quarterly. So let's move into quarterly so we can see the most recent quarter. Now, what we're looking for here is our equity position. So that will be our total assets minus our total liabilities will give us our common stock equity. So our common stock equity is our assets minus our liabilities. So that's the equity that we have within the company. We then need to understand what our outstanding shares are. So we've got our outstanding shares down here. If we take our common stock equity and we divide that over our ordinary shares, we'll get our book value per share. Now let's have a look at MSN Money. So this is MSN Money. If we come over here and again we look for Google, you'll be brought to a summary page. From here, we want to go and find both EPS and book value per share. On the summary page, we can see again EPS, TTM, so the last 12 months worth of results. And if we go over to earnings for MSN Money, and then we scroll down, we will get to a forecast versus actual EPS. So if you sum up the last 4 quarters, so the last 12 months, you will get the last 12 months worth of EPS results. We go to analysis, and once we're in the analysis tab, we can come down and we can see here within all this information, book value per share. So 367.95. If we scroll across to financials, you'll be able to see similar information to what we had in Yahoo Finance. So we've got income statement, balance sheet, and cash flow. Within the income statement, we've got the last 3 years worth of results, and we've got this broken out relatively nicely. We've got revenue, profit, expenses, operating income, and then down here, we've got net income. So we're looking here at an annual result rather than a quarterly result. You do have the quarterly option as well, but annual net income 4269.0 with a basic EPS of 59.15. What we do need to be able to get to this calculation is our outstanding shares. So if we come back up and we go across to the balance sheet, we take our net income number of 4269.0 and we divide that by our total outstanding shares, which when we scroll down, we should find our outstanding shares down here at the bottom, ordinary shares outstanding, 675.2. When it comes to book value per share, we come back down and we're looking for our total equity, which we have here. We divide our total equity by the shares outstanding and we get our book value per share. So very, very similar. They are slightly different layouts, but it's the same information that we're looking to pull out of both of the reports. If we now go across and let's have a look for a Google annual statement. So to do that, we need to go to the Google website. And once on a company web page, you're looking for investor relations, which if it doesn't jump out to you straight away, if you go to about, you will generally find it down the bottom here. So here for Google, you've got more about us, investor relations. This will take you to a page that'll have all the information you need as an investor to make a decision whether to continue to invest or to start investing. So what we'll do is click on the annual report. So the 2020 annual report, and we will see here the 2020 annual report. You will notice there's 134 pages. So this is where it can become really daunting to start pulling out the information. But again, if you know where to go to find apples in a fruit and vegetable store or in a grocery store, if you know where they are, they're really easy to find. If you've got no idea where you're looking or what you're even looking for, that can be really stressful. So what you'll do when you come to the report, I generally start by jumping about halfway into the report. So if we've got 134 pages, we're going to go somewhere around 65 to 70 pages in. So we're at 72 here, and we'll come through and we are looking for financial statements, which we have here. So it's page 76 of the 134, financial statements and supplementary data. Financial statements within this report, we've got balance sheet, income statement. They're the two that we need. There are additional ones here. These are the only two that we need. So if we keep scrolling down, we'll get to the balance sheet first in this report. And what you'll see in the balance sheet is a lot of information. But again, we know exactly what we're looking for now in both the balance sheet and also in the income statement. So let's start with EPS. So we know we're going to need both the income statement and the balance sheet. From the income statement, we're looking for something representing net income. And from the balance sheet, we're looking for something representing ordinary outstanding shares or common shares. So let's find net income from the income statement. The way the income statement is broken up, and I'll do a separate video on this entirely, but you're going to have revenue and you're going to have costs. The next section down is the difference between revenue and costs, which will be represented a couple of different ways. But what we have here straight away is net income. We've got the last 3 years worth of data as well, but this number here, 4269, is the same number that we referenced in MSN Money when we looked at the annual result. It also has below nicely for us here the EPS itself, both the basic and the diluted. But if we want to calculate that ourselves, we've got our net income number here. You can see at the top that this is represented in millions. So this number here is represented in millions. We then need our outstanding common shares. So we go back to the balance sheet, and you'll generally find this down below in the balance sheet. So when you come down, this one isn't necessarily all of that clear, and which also makes it a great example. We're looking for something that represents outstanding shares or common shares, and you'll see it here within this text. So it's the very last wording here is shared issues and outstanding. You'll see a whole heap of information about Class A, Class B, Class C. We don't need to worry about that. All that we need to worry about is what the total is, and that's listed right here at the front, 675,222, which was also a number that we saw in one of our previous reports. So the Class A, B and C, you add those together and you get this number. So 675,222 shares issued and outstanding. What is important when looking at this is making sure that you're not getting confused with shares authorised. Shares authorised and what can be released is different to what is actually outstanding. So we're looking at the issued and outstanding number. So for EPS, we're going to take this net income number and we're going to divide it by our shares outstanding, which we have here. So book value per share. Book value per share, we're going to get all of this from the balance sheet. So we know that we're looking for total equity or stockholder equity, and we can see that down the bottom. So the balance sheet is made up of assets. This is our total asset number, 319,616, and then liabilities and equity. So the first part will be liabilities, and we've got a total liability here of 97,072, and then we have the difference between these two being our total equity, 222,544. So that's our total equity number. We divide that by the shares outstanding and we get our book value per share. So let's now go and have a look at another example. Let's have a look at Bank of America. So we'll just have a look at Yahoo Finance, and then we'll have a look at the Bank of America website. We'll pull up the annual report and we'll match the information back. Bank of America, we can see on this front page here, EPS of 3.57. We can see a share price of 45.43. First thing we'll do is we'll go to the statistics tab and we scroll down and we're looking for income statement, and we're also looking for balance sheet. Within the income statement, we can see a diluted EPS, TTM of 3.57. We saw that on the summary page, and we can see under balance sheet, book value per share, most recent quarter, 30.37. So currently there is $30.37 worth of equity within every share with a share price of 45.43. When we go across to the financials tab and then we scroll down, we will see a net income common stockholder of 35,557,000. We've also then got basic average shares and we've got diluted average shares. So we take our net income, we divide that by our basic shares, and we will get an EPS of 3.6. We can also take our net income, divide that over our diluted average shares, and we will get our diluted EPS of 3.57. So nice and easy for EPS. We go across to the balance sheet and we'll have a look at book value per share. So now that we're on the balance sheet, we'll go across to quarterly and we will then scroll down so that we can see all of the balance sheet information. We're going to use the most recent quarter. And what we're looking for is common stock equity divided by the number of shares issued. Now, what is important here is that calculation's relatively straightforward. However, if we're wanting to calculate this ourselves and work out where common stock equity comes from, this is a little bit different to the Google example because we've got preferred stock in here as well. So what we would do is we take the total assets, we minus the liabilities, and in the Google example, this gave us the common stock equity. What we have with Bank of America is we have preferred stock as well. Now, simply preferred stock means that if the company is liquidated today, any preferred stock equities will be paid out before common stock. And because we're looking at what happens in the example of a liquidation sale, we need to remove the preferred stock as well so that we are only left with the equity remaining for common stock. So we take the total assets, we minus the liabilities. That will then give us this 270 number here. We then minus the preferred stock equity so that we get the common stock equity. Once we've got common stock equity, we're then free to divide by the number of shares issued or ordinary shares to get our book value per share. So now we come to the Bank of America website looking for their annual statement. So this is their homepage. We go across to About Us and we scroll down to the bottom looking for investor relations or something to that effect. And what we can see here is investors, profiles, quarterly earnings. We are looking for annual reports and proxy. So here we're looking for annual reports. Scroll down and here it is here for 2020, their annual report. So we click on that, and now that we've got the report, we can see straight away that we've got 207 pages to work through here. It's the same thing again. I will generally start about halfway through the report. So page 105, thereabouts. And what we're looking for here is financial statements. So if we just click through, we're looking for a financial statement summary page. We're also looking for balance sheet, income statements. And here we are. All right, financial statements and notes, table of contents, page 120 for the income statement, 121 for balance sheet. So we click through and we now have our consolidated statement of income, which is here on page 120. So EPS, we are looking for our net income, which if we roll down through, we can see our net income numbers here. We've got 2018, 2019, 2020. So just make sure you're clear on which you're using. So we take the net income, we minus the preferred stock dividends, which leaves us with the common shareholders' net income of 16,473. We divide it by the average common shares issued and outstanding of 8753.2. On the balance sheet, you will find the number of shares outstanding as well. You can see that here, issued and outstanding. However, on the income statement, they've kindly presented us with the average, so the weighted number, which is really helpful. And you'll get your earnings of 1.88. When we go over to the balance sheet, we are looking for total equity. So we know we've got assets, liabilities. Here's the total liabilities and total shareholder equity. So we've got our total equity number. We need to keep in mind here that we know that there's preferred stock, the 24,510 that we saw earlier in Yahoo Finance. We need to minus that from the shareholder equity. So that then leaves us with the common stock or common shareholder equity. So again, to work through that, we take total assets, we minus total liabilities, we also minus preferred stock, and that will leave us with total shareholder equity of 248,414. We then divide that over the total shares outstanding to get our book value per share. So again, we take our total assets, we minus our total liabilities, we minus our preferred stock equity, which leaves us with our total common stockholder equity. So total common stockholder equity plus preferred stock equity will be the total shareholder equity. What we're after is common stock equity. So we take that number and then we divide it by the total shares outstanding. We're not using a weighted number here in this example because book value per share, we're looking at a snapshot number as at today, not an average of the last 12 months. And that will then provide us with our book value per share. I hope this has been really beneficial for you. If it has, please click the like button down below, click the subscribe button, and look forward to seeing you in our next video.